Welcome to episode 8 of the Realtors. I'm David Blair. He's Trevin Perez. Hope everyone's doing well today. Trevin, how you doing today?
Fantastic. Fantastic, David. How are you?
I'm good. I'm good. It was a good week. Had a good month. Off to a pretty good start so far. Trying to put some deals together, get some listings under contract. You've got an announcement. You've got a new home. You're
Yeah.
hanging your hat somewhere else. Tell us about it.
Yes, sir. Yes, sir. Yep. I'm moving over to Compass, Florida real estate. They're national. They're a very large corporate uh, brokerage, and I'm super excited. I'm meeting with them today for some follow up on some new listings I'm adding immediately. So, yeah, I'm excited for this quarter and
Awesome.
just ramping up. Yep. Thank you.
What went into that decision? I know we talked this past week, and you were looking at a couple of the various franchises out there. So I'm with the ERA franchise here locally with ERA Davis and Lynn, and you had looked at an ERA company there. You had looked at maybe Coldwell Banker. What went into your final decision of where you ended up landing?
Yeah, so similar to what you have in the experience at ERA, I was looking for a support team. Have staff who are compensated to support our clients, so it's not just me as a solo agent at a smaller real estate brokerage. Even if they're not small, because they have hundreds or thousands of agents, but they operate in a fashion where it's up to you on your own. I just think that it would have been nice to have more support, more resources available. The more resources available as a company just gives our clients just more value. So, I wanted to look for someone who had a shared growth interest in mind, so we can really scale and expand. So if you have to share in the compensation, so be it, right? Because at the end of the day, our clients win, and I think your experience at ERA was part of the influencing factor. Compass is just a company I've looked at for years, and just never had it on my radar, but knew that I was looking for an employment style environment with a big team. So that's kind of why that decision came about.
Good, good. So let's expand on that a little bit for our audience in case we've got either some agents or customers out there that kind of are wondering about how the difference between brokerages work. So a lot of brokerages, if you know it or not, to our audience, they'll work on what they call a split. So a split is how the agent actually gets paid during that transaction, and there are some splits that are 100%, which means that 100% of the commission, you get that minus, of course, the standard fees that we pay, which are error and emission insurance, any kind of I pay like a corporate franchise fee for being under the ERA brand. And then at 100%, I think you'll find that you pay the majority of your expenses. You pay for advertising. In some cases, you pay for signs, lock boxes, all of those things. And then as that split goes down, a lot of times what will happen is you'll find you actually get something for that, or at least you should. So you get the benefit of either signs provided to you, some cases office provided to you. I think a lot of us are working virtually now from our home office, but sometimes that split, it equates some dollars that come back to you. And the broker does a little bit more. So that's where I ended up landing with ERA, is that the split's not 100%, but it's a fair and reasonable split. I think the office has a good support system, so I think that's kind of what you're alluding to as well. Is that ultimately you can go to a lot of brokerages that offer 100% split. I've always said the same thing: 100% of zero is zero. So it doesn't matter whether you're getting 100% of that commission. If there's no commission, you're not getting paid. So it sounds great on paper, but unless you're with an office that can support you and can provide leads, either on the buyer side or on the seller side, then it's probably just not going to be a good fit. What do you think?
Yeah. Yeah, no, well said. Well said. Being in the business now 8 years, I started at 100% brokerage, and it was all about all of the different bells and whistles that I could purchase or acquire through third-party services and marketing companies. And I think that that requires multiple hats to be worn. And of course, a lot of those expenses don't always pay off. So why reinvent the wheel when you can join a successful network and just get right on that bike pedaling immediately instead of starting from, a zero position, and just go faster, right? Go faster together.
Yeah.
So again, right, look at it a lot as, all right, if it benefits my clients, then more business will grow from it. So yeah.
Yeah, you froze up a little bit. I don't know if you noticed that in the picture. It's gonna look great on replay though, because you're doing like a really odd like upward angle. So that's kind of cool.
Oh,
So we
great.
might as well segue into. We're gonna kind of jump ahead a little bit and segue into one of the topics that we talked about, which was actually your internet connection and what you're working with at home. And that's no that's no jab at you because of internet, because we both experienced some bad internet this past week. We've had a lot of bad rain here in Florida. We've got a tropical storm remnants that are kind of rolling through, so everybody's had a ton of rain. I don't know if that's what the issue is, but I was without internet quite a bit, and everything that we do in some form or another is reliant upon the internet. They can literally shut your business down if you don't have internet access, whether that's from your phone or whether that's from your PC. Everything in the digital age that we rely on can be dependent upon that. So what's your thoughts? Who's your brand? Who's your go-to? And who can we throw into the bus that has terrible internet? T-Mobile. So what do you think?
Yeah, I'll tell you, I'm having a love-hate relationship with Spectrum.
Hmm.
Spectrum provides the internet and cable services in my entire community here in East Orlando, of Avalon Park. And so it wasn't their fault this time. It was the lawn provider, the lawn care provider. She was cutting our bushes, and she completely cut the wire. And we knew that it was around the same exact time as she was here yesterday.
Hmm.
And but of course we had no internet for 24 hours, and so we just got it back up literally minutes before this
Yeah.
call, and we were like, man, we felt really deprived not to have internet for 24 hours. Our We were doing hot spotting out of our
Yeah.
cell phone,
Yeah.
but man, it was painful. So yeah, so Spectrum is our main provider. I've looked into other companies like AT&T,
Hmm.
Fiverr, but I've heard, not so great things about them as well. And then there's that Starlink service through Elon Musk
Hmm.
and the satellites, but it's
Yeah.
super expensive,
Really.
so not something I'm ready to pursue, because Spectrum, for the most part, is
Hmm.
pretty reliable.
Hmm.
Um, so that's my 2 cents on the matter.
So we have in my area here, we have Xfinity, which used to be Comcast. We have AT&T, Uverse, and then now within the last couple of years, new to the game is T-Mobile. Xfinity used to be the standard. I think they still have really good service. I would probably go back to them. I'm not crazy about their customer service, which is why I left several years ago. Their cable could be kind of in and out sometimes. AT&T hasn't been great. I actually have two connections right now. So to have two connections and still have internet problems is pretty discouraging, because we have AT&T and T and then I have T-Mobile. But I noticed something about T-Mobile. I had a friend that was telling me about it. He said, it's great. He said it's only $50 a month. You should try it out. So we tried it out and it was great until it wasn't.
Mhm.
And we had some problems with it. We still had the AT&T system, so we relied on that. So we actually have both that we're kind of bouncing back and forth now. But I noticed something kind of interesting on the T-Mobile device. It's plug and play, so you plug this device in. The commercials that they put out within the last year or so, and the guys from Scrubs, I think it is the episode or the
Mhm.
series. They've got the two actors from that are in the commercial, and they're dancing around and singing about their internet connection. And I think the big muscle bound dude with the long hair, Jason Momoa, I think, is
Oh,
on one of the
yes.
commercials around the Super Bowl time. So I noticed
Yep.
something interesting in that commercial. At the very top of one of the actors is singing from a window, and that's where the device is sitting. And the device is sitting at the very top. with the window open, and it's almost put there strategically because they tell you that you need to put this thing at the highest point near a window and things like that. Well, what if I don't live in a two-story home? I live in a single level home. So,
Right.
that does me no good whatsoever. I've got it pressed up to the window in the back of the house, and that's the strongest connection that I'm getting from it, and it's still kind of intermittent. So um, I may have to I may have to kind of eat a little humble pie and go back to Xfinity and have my internet service because doing a podcast. Go ahead.
Well, I was going to ask you, I mean, are you using a separate Wi-Fi modem?
I don't know a lot about that stuff. Yes, I am. I think I am.
Okay.
If
Okay.
not, I'm gonna say I am, and then after the show, I'll tell you no, I'm not doing that at all. So,
Okay, because the Wi-Fi modem, especially the mesh systems,
hmm
are going to be
hmm
ideal. I think we talked about the one I'm using, EERO,
hmm
Aero, and
yeah,
it's an Amazon product. It's three boxes that bounce signal off of each other to give you equitable coverage in the house. I think
hmm
it's a really great product to try before you completely, kick one of the services to the curb.
Well, so there's two, and we have the router, so we have the modem, and then we have the little extenders. I've tried to use
Hmm.
those before. Our house is about 2,000 square feet, so it's not that large. So from the standpoint of coverage between those two, we should have pretty good coverage. But I think what's happening, in my opinion, I think they're fighting one another. I think that T-Mobile
Yeah.
is over here, AT&T is over here, and they're trying to connect to different devices at different times, and maybe that's
Hmm.
causing some of the hiccup. I also
Yeah.
plug in my phone sometimes directly to my computer, so I noticed it was trying to pick up a hotspot there. So it's probably user error on my part, but I'm gonna
Mm.
I'm gonna blame someone else because it's got to be someone else's fault. It can't be mine. It can't be mine.
Sounds like an agent.
Yes. So let's talk about some real estate specific stuff. So this week, I put a condo under contract, and one of the things that came up during the discussion of repairs and things like that were the fact that there was a new law that was passed by the governor Ron DeSantis that condos have to undergo a structural integrity reserve study, I think is what it's called. SIRS, that's what it stands for. So last year, I think it was the last year in South Florida, they had the condo collapse. Was that last year?
Yeah, that was last year.
Yeah. So as a result of that, what's happened is the governor has said, okay, we want all of these condos inspected by the end of this year, is my understanding. All those condos
Yep.
have to be inspected by the end of this year. And whatever comes from that study, for example, if the structural engineer comes back and says, you've got significant repairs that have to be done to these buildings to keep them, to keep the integrity up, that's what's going to have to happen. And that's going to result in an assessment. And from what I'm hearing, in some cases, some pretty big assessments, depending on when that condo was built. So we're going to talk a little bit about that. I want to kind of get your thoughts on what you think, how you think that's going to affect condo sales, going forward within the next, I would say, few years. Actually, that's gonna be a pretty good impact down the road.
No, absolutely. That's so severe because most condo associations don't have enough reserves. Though that's dollars in the bank in the savings account for the community to operate for big assessments or big repairs. And this new law, because of that property that went down, surprisingly killed a lot of people. There's a lot of old buildings, especially this is more an issue in South Florida than a lot of places, but obviously, in St. John and Jacksonville and Orlando and other parts of Florida, we have condos. And I think across the nation, this is going to affect us. So I was looking at a report, and they were referencing how many condo owners in South Florida are paying higher assessments, so higher HOA fees than their actual mortgage payment. So we have a very large number of condos that are on the market right now. Everyone's trying to get rid of them, but nobody would touch them. So it's going to be almost like a liquidation sale
Mhm.
because these buildings are so poorly maintained.
Yeah.
So unfortunate.
I think what's going to end up happening, and so we have in our beaches area here, you do have some older condos, some that are maybe only 3 stories, but we do have some high rises here as well that were built within the last 10 to 20 years. Um, I'm not a structural engineer by any means, but I think the ones that are going to be most impacted are those that were built within that 70s, 80s time period,
Yeah,
because I think there's obviously new building codes that exist right now that were not around then. So it's going to have some major impact. So just to kind of lay that out and explain it to our audience, the way that works is that if you've got, let's say for example, you've got a condo, and to your point, if you've got a mortgage payment that's let's say it's 1,000 or 1,500 bucks, and then all of a sudden you've got a new assessment that comes in there, and that assessment is five, six, $700. Well, you've added that into that equation. So if you're a buyer now and you're looking at that property, you're saying, okay, well, I can either buy this condo at 22, 2,300 once you add on that assessment, or I can go buy a single family home that's priced higher. I get a little more buying power of being able to go and purchase that single family home versus that condo. And then the other side to that is those condo prices get driven down quite a bit. I've seen it here locally. We had a development here in Northeast Florida that a few years ago there was a pretty good size assessment because of an um, uh, AC handler closet error or building design. So they had to come back in. They basically had to redesign these units, and it resulted in about a $700 to $800 assessment per month, which drove the prices of that condo development down from at a peak of maybe 250,000, drove them down to as low as 80, 90,000. So it can have a pretty big impact. So hopefully a lot of these things were built the right way, and also hopefully that the condo development has fully funded those reserves to where they're not going to be impacted as much. But that's something, if you're a
yeah,
buyer that's out there looking at condos right now, you need to be mindful of. And if you're a seller, um, it's a tough spot. It's a tough spot to be in. There's not a lot that you can do about it. You know, or maintained. So maybe I don't know. You just have to see where those numbers shake out at, but it's going to be pretty tough. So
yeah.
um,
Well,
that's
let me just add some final thought on that. Looking at South Florida alone, right? So Miami-Dade, Broward County, and Palm Beach counties alone, there's 22,000 condos on the market today, and that's
mhm,
more than the last several years. I'm just looking at some stats here. Back in some points of early 23, there was less than 10,000. So this problem, because of the requirement by the government, as you're saying, has to do this special structural inspection, and it has to be every 10 years. So of course they're going to find problems that need to be repaired. The saddest part about this, David, in my opinion, is the fact that most of these condo owners are retired.
yeah,
They're white haired, people in their final phase of life, just trying to enjoy the sun, the beach.
hmm
And these condos are getting very expensive to maintain and hold on to. So my only advice to them would be reach out to David and I for some advice on how we can help you, because
yeah,
there's definitely some options to explore, but it's not pretty.
yeah. So one of the last point I'll make on it, and it's one of the things that we're going to talk about next, is homeowners insurance. So a lot of customers ask, well, what where do the condo fees come from? The fees that you pay each month on a condo, where does that money go, and how is that figure determined? A large portion of that money that you're paying as far as condo fees goes to insure that property. It goes towards homeowners insurance. So when you're purchasing a condo, you don't have to buy homeowners insurance. You can actually buy what they call it's almost like renter's insurance, where it just you insure the contents because you're not
Mhm.
responsible for the building. But the reason a lot of these association fees around your beaches area, or at least our beaches area, are so high is because of insurance, because of the affordability of homeowners insurance. So as homeowners insurance rates go up, some of those condo fees go up as well, because a large portion of that fee that you're paying each month is a result of homeowners insurance. So with that said, similar issues with homeowners insurance right now. There's a couple different things in our market. I'm sure it plays a part in yours as well. You have a 4-point inspection that's done on properties now, and a lot of insurance companies will take a look at that 4-point inspection and determine whether they want to insure the property or not. So I wanted to talk and kind of get your thoughts a little bit on that, as far as how that can affect a buyer, and what kind of effects you're seeing in your market.
Yeah, so we're still talking about the home insurance. I think the one of the major challenges that I'm seeing a lot lately with customers and former clients, heck, including myself, is the fact that flood insurance is becoming a necessary evil, and the what is it, the Corps of Engineers
Hmm.
who determine what's a flood zone versus what is not a flood zone, which as agents, we see it as an X,
Hmm.
as the flood status. It's not inside of a 100-year flood zone,
Yeah.
is changing, especially
Mhm.
because of the storms that we're encountering over the last year or so. So here in East Orlando, the Oviedo area got hit by a lake over flooding due to the storm, causing some neighborhoods to have 10 feet of water. And I was talking to an insurance
Wow.
agent I work with, and she had said it wasn't required, but thank God she had the flood insurance policy because she was able to rebuild her house and stay where she was. And and what I learned, which was interesting, and we might want to have an insurance broker on the call on this podcast because it's such an interesting topic. She was explaining that whether the water came from the ground up or it was a torrential rainstorm that caused all the damage and went through the roof, any
Mhm.
kind of flood from water is not covered without flood insurance. So I
Mm.
just found that fascinating. I have a investment property that we manage in Fort Myers, and Fort Myers got hit really bad 2 years ago. Um, it wasn't required back then, but this year we got notice. You better have flood insurance,
Mhm.
Citizens, who is the major carrier here in Florida, because all of the private companies have left.
Mhm.
So the government is the insurance provider for the entire state for the most part because of our coastal communities. And you wonder, David, I mean, how long has Citizen been doing this? Can they continue to do this effectively? Um, what's the story with insurance? Because it's only increasing.
Yeah, I've seen a couple different things. So typically, what happens when a homeowner goes out, they get a 4-point inspection done on their property, which covers heating, cooling, plumbing, electrical, structural items on there. And if the inspector that did that notes, I had one a couple weeks ago. There was some cloth wiring in a property, so they had to go in and they had to remove the cloth wiring that was noted on the report because they wouldn't insure that. We have a couple of panels, electric panels. Challenger is a brand. I actually have that brand in my home, in my garage right now as we
Mm,
speak. And I've had an electrician tell me, he said, I've put in, he said, over my career, I've put in thousands of those panels and never had any issue. Knock on wood, I hope I don't have any issue with it. But at some point, they started having some type of issue with that panel. And because of that, it raised a red flag with insurance companies to where it's on their banned list basically now, at least in my area, to where if you have that type of panel, the insurance company will require that you replace that before they'll actually insure the home. And then you're looking at issues of replacing that, is that either the seller that's trying to sell that property has to replace that in advance, or that buyer has to be willing to come in and say, okay, um, I'll take that on. I'll replace that once I buy the property, and then work with an insurance company that'll give you at least a 30-day grace period in which to go ahead and do that. So there's a couple different ways that you can work it out. But ultimately, that panel is going to have to be replaced in those instances. The other items can be galvanized plumbing. I've seen that come up on reports lately where property has galvanized plumbing and they don't want insurance companies don't want to insure that type of property. Where the water heater is located can come into play if it's located within a second floor or an interior structure. So there's a lot of things that can impact whether your home can actually be insured, and ultimately affect whether you can move forward with that property. So if you're on the selling side, what I would say is take a look at, when you're getting ready to sell, look at some of the components of insurance. Look at the um, look at the water heater, your roof, of course, all of those things, and kind of factor that in, because those are some things that you may not think you're going to have to contend with when you sell that property, but then they end up coming up. So I think a lot of customers feel, well, my home is insured right now. I have insurance with the property right now, so anyone else is gonna be able to insure it. A lot of times those things get grandfathered in, so you're not able to just go ahead and turn back around. I found in the majority, I don't know about yours, in the majority of my cases, when we've gone back to the current company that was insuring the property, either the rate was going to be substantially higher, or in some cases they weren't going to insure any new policies. You find the same thing?
Yeah, yeah. Which is why you end up running back to Citizens. They're the catch-all for all insurance policies. It's funny. I was talking to my insurance broker, and I have a USAA. So my dad is a veteran. So you get the benefit of your family members being veterans, so you can join. And I have a home insurance policy with them. And I told her that she has other houses that I manage, but not my primary home. And I said to her, we should get a quote. She was like, Trevin, you better keep USAA. I always tell my customers, do not cancel that policy, because there's a rider in the USAA policy that no one else, not even Citizens, but no one else provides coverage to, and they protect you. So I thought that was just one of those tips that
Mhm.
that
Awesome.
you just, as an agent, it just provides a lot of value, for our
Yeah.
clients and our customers.
Yeah.
So
So we looks like we've got about 5 minutes left on
we
our
can
segment
actually go
today.
longer. We can
Yeah.
go
Okay.
longer. Yeah,
Okay.
yeah. Listen, our audience have been asking for more,
Yeah.
so
Okay.
I think we should give them more.
Yeah, I don't think we should cut them short. I don't think we can cut them short.
No.
The phone line is over here blinking. I'm not going to take any calls today.
Yeah.
We're just going to go ahead and stay on topic. So if you're out there on the phone and you're waiting to get through, the lines are busy. I understand that. We're just going to keep on rambling on here and see what we can do. So we're doing it a little bit reverse order. So market update. What do you want to say about market update? You've got some information you want to share about unemployment numbers.
I know. Man, you make it sound so depressing when you say it like that. Let's see. Geez, I wasn't prepared. I wasn't prepared.
So
Um,
market, I'll jump in real
Talk
quick.
to me.
So
You
so
can talk
market
to me.
local market here has been it's been good. Like I said, last month I saw a little bit of an uptick in showings on properties. I'm getting a lot of here recently. I'm getting a lot of we're just starting. We're just starting the process. So they'll give great feedback on the listing. Home looks great. Met all our customer. Met all the customers' needs, but they're early on in the process. So that tells me that there's more inventory out there, and there's not an urgency right now that you have to move forward with a contract. Whereas we've seen markets that we just came out of last year that wasn't the case. If you saw a home and you liked it, you needed to go ahead and move forward. What I would suggest to a lot of buyers is that when you don't overthink it. If you like the area where that property is located at, and then the home fits your needs, don't think that there's going to be 20 other properties out there that are going to fit that box or those parameters, because what ends up happening in those cases is you think, okay, well, yeah, we saw that property a couple of weeks ago. Well, guess what? That property is still on the market, and other people are continuing to look at that property while you're shopping at other homes. And what happens is you come back and say, hey, what about the property on XYZ Street? Well, it's not available now. It's sold. It went under contract. So if it's priced well, it's in good condition, it meets your needs or your family's needs of what you're looking for, and you like the area, make an offer. Make an offer on it. Another tip, in my opinion, that's good for a buyer is that it's good to be the only person at the table negotiating. So what I mean by that is when you make an offer on these properties like that, if you're the only offer, you've got the seller's undivided attention. You have their attention, and they can look at that offer, and you've got an opportunity to in some cases get a pretty good deal, versus you get into that situation where now the seller has 2 to 3 different options. He can pick and choose at that point. He can pick the best offer that's out there, which is not going to be the best for you. So don't get yourself into a multiple offer situation. When you see a property that meets your needs, have your agent make an offer on it, or call me or Trevin, and we'll make an offer on it for you. So
Absolutely. And so what I want to piggyback off of regarding what you're talking about here is I'm going to share this one graph that really speaks good volume to what we're discussing here. So from a market perspective, what we want to speak to here is the fact that the monthly change in U.S. jobs. We see a slight uptick here in this report. Why does this matter, right? From a real estate standpoint, well, for our clients, the job report got dipped a few weeks back in one of our episodes, and it caused the stock market to, you know, drop by 1,000 points. Now, it wasn't just the job report; it was other things. But we're expecting that the job report is going to show positive gains, for August with increase in jobs. The affecting the civil engineering, construction space, specialty trade, healthcare. So all of that is positive when it comes to the federal chief, what's his name, Jerome Powell, and hopefully they're saying in this article and in others that he could be taking a 25 basis point drop on the interest rates, which will help buyers come back to the market because they're going to see more attractive interest rates, and that's going to lead to more buyer activity. So just reach out to us because we're really our hands are close to where the market is going, and so we can help you take advantage of any kind of rate decrease and jump in before the rates increase. So that's what I'll share there.
Awesome, awesome, good stuff. Yeah, so going forward, you're going to go back to. Looks like you're going to be going back to. Not really a team, I would say per se, but
No.
just more of a environment, real estate friendly environment, with where you're headed now. So I know you'll do great things there, and continue to have success that you've done with any companies that you've gone to. I currently have the partnership. I still work with OfferPad. We're still partnering with them. And I think you still have some opportunities from what we've discussed, with some other cash buyer options that you have maybe in the pipeline as far as who you'll take potential offers to. You still have someone?
Yeah. In fact, we have a concierge service. So we have a suite of different services that we can help clients with. In addition, coming soon, which is something that you always bragged about,
Mhm.
along with the cash offer opportunity, but then also some more off-market potential deals being done. Because let's face it, right? In your MLS, just like mine, there are a lot of deals that happen outside of the MLS and
Yeah.
outside of maybe traditional realtors being involved, or they're just transactions that never hit the MLS or hit Zillow and realtor.com. So a lot of that off action. And let's face it, a lot of clients don't always want to go live on the market. So, I think that the goal here is to provide more tools to help people where they're at.
Awesome, awesome.
Yeah.
I've got an amendment that I'll throw out there. So a few weeks back on one of our earlier podcasts, we talked about Zillow, and at that time I gave some incorrect information. So I did want to correct that. At that time, I said that Zillow um, advertised that there could be as much as a 20% variance between where they were. Uh, where their numbers were versus where that property was listed at, and that's actually 8%. So it's not 20. So 20 was pretty bad. 8% is not any better in my opinion. So they're not as much of a devil as I originally. They still are the devil. The pitchfork is just not as long. Just for simple math for people, at 300,000, if they're saying that, if they're a property at 300,000 minus 8% is 276. So it's still pretty substantial. It's about $24,000. So there's still a pretty big variance within there. And I think when you play those numbers out, sometimes it can be a little bit bigger. I think you use them quite a bit as well, and I think
Mhm.
it's probably a little more accurate. Again, I'm not piling on to Zillow, but I just
Well,
want to. I want everyone to kind of cool their jets a little bit in regards to thinking that Zillow sets home prices. They don't. Zillow takes properties that we list, if I haven't mentioned that before, and they use that to basically come up with a valuation. So
absolutely. In
Zillow for
addition,
that. For that, I'm sorry. For that, I'm sorry.
well, I would say that that pitchfork, I'm going to sharpen it today because I've been dealing with great sellers who are trying to understand why these estimates are so wrong.
Yeah.
Um, or two ago, the property appraiser site shows the addition. They added 1,500 square feet to the home. So bedroom, 2.5 bath to now a 4 bed, 4 bath house. And Zillow has it wrong. All of the sites go into Zillow, update his home facts, and it's wrong, right?
Hmm.
So
Mhm.
Trulia has it wrong, Realtor.com has it wrong, Homes.com has it wrong. And because it's not a refresh process, and I think we've
Yeah.
been spoiled by Zillow because they take our information, they regurgitate it, they refresh it, and they disseminate it.
Yeah.
So now it's been 48 hours and we're tracking, are they going to update their estimate? Because from this homeowner's perspective, when you look at his subdivision, it doesn't make sense. It's not logical why some of the houses have one value versus the other. Compare a 4 bedroom, a 4-4, and a pre-existing 3-3, and say 2005. So, and then of course the neighborhood around it, some of those subdivisions have 500K value. So, it's just an interesting battle because they do such a great job of marketing their services to consumers,
Mhm.
that as agents, we have to fight through that noise.
Yeah. Well, my broker always told me one thing that's kind of held true is your home is worth what a buyer's willing to pay for it at the
Exactly.
end of the day. I mean, that's
Exactly.
exactly that says this, realtor.com says this, Trulia says this. It doesn't matter. What that's always gonna decide what the home is worth. So just keep that in mind if you're out there, buying and selling. Those things are always going to factor in. So that's all I've got for this week. Trevin, you got anything else? You good?
No, I'm good. I think that we covered a good mix of topics this week. I think our viewership were asking for some additional insights. Unfortunately, the Kiss Mary Kill today, but we wanted to add a little bit more variety and depth to the conversation. So we hope that you enjoyed our episode this week, and we hope you have an amazing weekend. Do you have big plans, David?
I'm actually gonna be in your neck of the woods. My stepdaughter is gonna make the 2-hour trip to Orlando on Saturday. Hopefully, maybe we'll be able to catch up, grab a cocktail in between being good parenting. What do they call it? What do they call that? What do they, there's some term for it.
I'm not sure.
Yeah, yeah. This well, parenting. Yeah. So we're gonna try to be good role models. I was just told that there's no
Okay.
alcohol allowed at this tailgate, which I find is just preposterous. Sounds like the worst tailgate ever. So we'll go to that, spend a couple hours there, and then maybe go to an Applebee's and watch the UCF team take on whoever they are. So
Enjoy, and yeah, definitely. Hopefully, we get to connect. I'm meeting up with an investor. I'm going to take them down to the co-living space, homes, and review it and kind of talk shop Saturday morning. And so in this way, I'm back in town. If someone decides to, hit me up.
yeah, definitely.
So yeah,
Okay.
no, that's awesome.
All right. Well, everyone, thanks for tuning in. Have a good week. We'll see you next week.
Take care.